Welcome back. I'm Adrienne, your expert on all things custom home building and luxury. Don't forget to like, share, and subscribe. Tell a friend how much fun we have on the Fraser Homes channel. So the difference between a traditional loan and a construction loan is a traditional loan is based off of an installment. Let's use an installment loan. So an installment loan is if you buy a house or you buy a car, you get funding from a lending institution or a bank. So let's say your resale house is $250,000. Well, whoever the owner is of that house, who's selling that house, they are going to get a lump sum from your lending institution for $250,000. Now you're going to pay that back using an installment philosophy or amortization, however it is structured with your lending institution. So you have $250,000 and you're going to pay that down over a course of time period. Generally here in the US, it's 30 years that we're paying off our $250,000 loan. With a new construction, you have that same concept. So if your new construction is $250,000, but the disbursement philosophy is very different. So the $250,000 is going to be dispersed to your builder instead of dispersed to the seller. And that is going to be dispersed over a time period. When we talked about the resale at the $250,000, that is dispersed at the time of closing. So $250,000 goes to the seller. Now you are immediately responsible for the repayment of that $250,000 to your lender. When you are doing new construction, you will see $250,000 is going to grow over time as far as how we get to the $250,000. So we might not get to $250,000 for a year. And that looks like progress payments. Okay. So we've talked about progress payments. Remember, we talked about retention. We will link that video in the description box below, but the retention is what the lender is holding back to satisfy the terms of the new construction agreement or loan process. But before we ever get to that process, we are collecting progress payments. And those progress payments are a direct alignment with what work has been done. So an example is the foundation. If the foundation costs $25,000, Fraser Homes will put the foundation in, will submit to the bank that the foundation is in, and the bank will release $25,000 to us. You as the consumer are now responsible for the repayment of $25,000. You have not gotten all the way to the $250,000. You only have borrowed. Based off of this case study, you have only borrowed $25,000, and that will continue on throughout the entire build until we cap at $250,000. Now, when we talked about change orders means that $250,000, we're over the $250,000, and the bank generally is not lending on change orders. So that means you need to have some cash reserves if you're making change orders, because as your builder, I'm going to come to you and say, hey, I need to have this money for your change order, and I'm not going to request it from the bank. So it is essentially the same at the end, where you have a $250,000 debt with a new construction, just like you have a $250,000 debt with a resale. But how we get there is a little bit different. Next time, we'll talk about the difference between new construction and a jumbo loan, and we'll also talk about lines of credit. All of these things are important when you're thinking about new construction, because the lending institutions, they are using different factors in approving you for new construction versus just a traditional or a conventional loan. And we always want to make sure that you know the difference.